Hello guys, welcome back to my channel. Let's talk about our final accounts today, final accounts with adjustment. So to be talking about the final accounts with adjustment, we need to prepare which type of account, that is trading account, profit and loss account, and also a balance sheet. I always guide my students that they should prepare trading P&L and balance sheet all together. That means for the trading account, if I have to talk about, you have to take one single page for your answer sheet. There you will write trading and P&L account, and this would be split into the two parts. What two parts would be there? One fourth or little bit more than the one fourth of your page should be for your trading account, and the rest of the page should be for your profit and loss account. Then when we talk about the balance sheet, that would carry two sides, liabilities and asset sides, right? And here the liabilities, that is payable to the outsiders or to the owner itself, and assets of the business, which might be current assets or non-current assets. So let's talk about the given statement. First of all, we will discuss the statement and then we will go for our solution. Firstly, we need to talk about this statement. Okay, guys, for the statement, we have first item capital. Capital is the liability of the business, so it will be carried to the balance sheet. Creditors is also liability, it will be carried to the balance sheet. Now, rent is a credit balance given to us. First of all, whatever carries a credit balance, either it would be your liability or it would be your income. Here, rent carries a credit balance, that means it is your income, so it will go to the profit and loss credit side, not to the trading account. Why it will not be carried to the trading account? Because better, rent is not from the business. The business related transaction would be taken to the trading account, and the transaction which are incidental to the business or which are not directly related to your business will be taken in the profit and loss account. Then is the purchase return. Purchases are expense, so they should be debited to trading account. Without purchase there would be no sale, so that's why purchases are taken to the trading account. Now here is the purchase return. Purchase return will be given a deduction from your purchases account, so it will be taken to the trading account debit side by way of deduction from your purchases. Then sales is the income of the business, so sales would be taken to the trading account on the credit side. The credit side of the account is for the incomes, right? Then provision for bad and doubtful debts, these are always taken to the profit and loss account credit side. This given in the trial balance would always be a credit side of P&L, because last year provision becomes income to the business. Last year we maintained a provision, this year this provision will become income to the business, that's why it is credited to the P&L account. Then advertisement expenses. First of all, moving onwards towards these types of expenses, let's talk about the types of expenses. There are some direct expenses given in the question, and there are some indirect expenses. Direct expenses are taken to the trading account. How to identify they are direct? If they are on purchase, they are on production, or if they are related to the factory, that would be termed as your direct expenses. How to identify indirect expense? When these are on sales, that would be indirect. If these are related to your office, that will become the indirect expenses, so they are taken to the profit and loss account. Now here I am provided with advertisement expenses. Advertisement which is meant for the sales, so would be carried to the P&L account, and it would be debited there because it's an expense. You know very well that in trial balance video I have discussed the and assets have a debit balance, and whereas our liabilities, capital and incomes carry a credit balance. So as per this, goodwill is an asset, so it will be shown in the balance sheet. Machinery is an asset, it will be shown in the balance sheet. Discount given as credit, so discount is credit, that means it is an income, so it will go to your P&L account, not to your trading. It will go to P&L because discount is on your transaction which is not related to your purchase purchase or production, rather this discount is for the payment, right? Payment received or payment done. For that purposes, this is taken to the P&L account. Journal expenses is also not a direct expense, so P&L account, but it would be shown on the debit. Expenses are debited. Sales are credited, so sales return is shown by way of deduction from your sales in trading account, credit side. Then the next is about our discount allowed. This is an expense of the business, so it will be taken to the P&L account on the debit side. Patents are the assets, would be taken to the balance sheet. These are intangible assets, so it would be taken to your balance sheet. Then is the opening stock, because it is 1st January or 1st of April, so it is opening stock, it will go to your trading account debit side. Then debtors, they are your asset, it will be taken to your balance sheet. Cash at bank, it is also asset, will be taken to your balance sheet. Drawings would be shown as a way of deduction from your capital in balance sheet. Okay, drawings are done from capital, so deducted from capital. Purchases, trading accounts debit side. ठीक है. Then carriage is an expense. Here the question is silent about the carriage, so what we have to assume about the carriage, that it is your direct expense, because question is silent, so we are assuming it to be direct expense. If it is written that carriage is on purchase, carriage is on production, carriage is inward, then it will be taken always in your trading account debit. If the question is silent, even then it would be the debited to trading. Wages are also direct expenses, trading debit side. Power, coal, fuel, power, these all are direct expenses, would be taken to your trading account. If it is electricity, then it would be taken to your profit and loss account. Rent and insurance, it's indirect expense, taken to your P&L account debit side, because rent is not directly concerned with purchase and production. Salary is also P&L account debit side, it is also indirect expense. Income tax is the drawings, right? Because when sole proprietor is paying income tax out of the business, it is treated as drawing, so it would be deducted from your capital in the balance sheet. Then bank loan is a liability, it would be shown as a liability in the balance sheet, and there is given interest on the bank loan, it's an expense. Now interest is on the bank loan, so it will go to the P&L debit side. We have talked about much of the points, but there were adjustments also, so let's go to the adjustment part now. I'm given stock which is 31st December, so it is your closing stock. Now it is in additional information, it is in adjustment, it will go at two places. I have discussed a number of times. Whatever appears in the trial balance will go at one place, and whatever appears in your additional information adjustments will go at two places. So I'm given in the question is the closing stock. So closing stock will go at the two places. One, it will be taken to your balance sheet asset side, and second, it will be taken to the trading accounts credit side. Opening stock on debit side and trading closing stock on credit side. Now fire destroyed a stock worth rupees 20,000 and which was not insured. So here your stock is lost, right? Your stock is lost. This point will also be taken at two places. One, because there was a loss of stock, so it would be a less from purchases. Second, it would also be shown as a loss on P&L debit side because it was not insured. Then provision for depreciation on machinery is to be at the rate of 10%. So how the depreciation we will consider, it would go P&L debit side, okay, and then when we are talking for machinery, it would be in the balance sheet. From machinery we will deduct the amount of the depreciation. P&L account debit side, because depreciation is a expense for the business, non-cash expense, and another machinery we will deduct it the and shown in the balance sheet asset side. This is the two adjustments we are carrying for depreciation on machinery. The next is the point about patents depreciation. Patents depreciation rate is given to us as 33 1 by 3%. Now 33 1 by 3% means 33 into 3 99 plus 100 divided by 3 100 divided by 3, and this percentage would also be carrying here, so this becomes 1 by 3. So depreciation on patents is 1 by 3. How much is the value of the patents given? 2700. So 2700's one third becomes 900. So 900 would be shown as an expense in P&L account, depreciation on patents or amortized value of your patents. But on another hand, the patents in the balance sheet would be shown with a value of rupees 1800. From 2700 we will deduct 900 and we will show it with rupees 1800. Okay, now there is a point that increase provision for bad debts to rupees 2000. Now what the point we have to do provision for bad and doubtful debts, this would be debited to your P&L account, okay, and deducted from your debtors in balance sheet. 2 points we have done for this, right? Then carry forward two-thirds of the advertisement expense as unexpired. So what was the advertisement expense value? 16,050. Out of this 16,050, he says that you have to calculate a value of 2 by 3. That value should be shown in the balance sheet as unexpired. Unexpired means the expenses which we have paid but the benefit we have not received. So it would be shown in the balance sheet on the asset side. But the leftover expense, that is 1 by 3, if 2 by 3 are going to the balance sheet as unexpired, so the leftover value of your advertisement, that is 1 by 3, would be shown as expense in your P&L account. So these are the two treatments of your advertisement expense. Then annual insurance premium is of 1200 has been paid up to 31st March. The question was ending as on which date? I was given the closing stock for 31st December, right? So that means question was ending as on 31st December, but he is talking about expenses which were paid up to 31st March. So here 3 months advance expenses are paid. How to calculate these advance expenses? In the question I am given 1200 rupees which were paid per annum. These expenses were for per annum for 12 months, but our year is ending on 31st December, so Jan, Feb, and March, till March. So 3 months advance we have paid on them. So how much is the advance value? That is 300 rupees. This would be deducted from your insurance, less from insurance in P&L account, because this does not belong to this year. Then it would now we have done one treatment only, and the second we will take it to the balance sheet on the asset side as prepaid insurance, like we did for the advertisement. Balance sheet asset side as prepaid advertisement, and same as for your insurance premium. There we have to calculate 2 by 3 or 1 by 3. Here we have to take into the consideration for the months. Now manager is entitled to a commission of 10% on the net profit before charging such commission. Now there is a point of before. This I like to discuss over here. First of all, when we have to give a commission to manager, that is to be calculated on net profit. So the part of the profit which you calculate from your P&L account would be net profit. So net profit, if it is written that you have to calculate before charging, then you will take 10 upon 100 as given over here, 10%. If it is given, this is the case for before charging. If it is a case for after charging, rather than in the question here before, it is given to you after charging, then for the net profit you will take rate upon 100 plus rate, that is 10% plus 10. Whatever rate you are writing in your numerator, you will write in denominator also. So that means this becomes 10 upon 110 of your net profit. 10 upon 110 of your net profit. If the rate would have been 5, then we have taken 5 upon 105. So here whole of the statement is discussed. Now we are going to our solution, how we have taken it. In the first half of your trading account, we have considered sales. Credit side is our income side. So for the credit side, we took sales less sales return and closing stock, made up a total over here. From that we deducted opening stock, purchases. Now how to take the purchase? Less purchase return, and there was a loss by fire also. We deducted that, we got net purchases. Then carriage is direct expense, wages is direct expense, power is direct expense. We got gross profit from here. That is the total of credit side less the total of your debit side. From this we got a higher value, so that's why here we got a gross profit of 99,500. If it would have been on the credit side, then it was loss, so we would have written it as a gross loss, right? So now this profit would be taken to the second half, from where we will deduct the more expenses and get our net profit. So gross profit is here, and we added it. All other are indirect incomes, that were rent, provision for bad and doubtful debts, discount, right? So this all things which we are talking here are not from your business. These all incomes are not from your business, directly operating your business. Rather, discount is on making a cash payment, rent is because you let out your property. That's why these are taken in the second half. What about the provision for bad debts? These are those provisions which were given in the trial balance we took on the credit side of the account. So these all three of things, three things were given to us in the question, and we took the GP on this side, right? Now from that we took our salaries, discount allowed, journal expenses. Now advertisement expense, how we calculated advertisement expense? This is 160 five zeros one third, which we put over here. Then depreciation on machinery we took here, right, with rupees 2000. And then on patents, that was your value 1 by third. And loss of stock by fire, provision for doubtful debts, this was the new which were given in the question. These are the new one which we put on the debit side, and given in the trial balance we put on the direct credit side. Then rent and insurance, there was a point that 300 were prepaid, that we calculated, we deducted it here, put the amount here. Then interest on bank loan was of rupees 1500, that was given in the question. From the total of the credit side, when we deducted debit side, we got a net value as to be negative. So that was our net loss from here. So net loss from here is our balancing figure, right? So net loss in the business is of 10940. But question was asking us to give a commission to the manager on the net profit. Commission was payable on the net profit. If it is a net loss, so no commission would be given to your manager here. There is a loss in the business. Now how to carry this loss to the balance sheet? Let's see about that. Yes, guys, about your balance sheet, on the liability side, we have capital, less drawings, less income tax is also drawings, less net loss. If it would have been the net profit, we would have added it. It is net loss, so we deducted it and portrayed it here. Then creditors, then bank loan, we made a total here, right? Then on the asset side, we had machinery. After deducting your depreciation from 20,000 value of machinery, we deducted depreciation of 2,000. We got a value of 18. Then we took goodwill, then patents, two-third value. Closing stock has to go at two places. So in the balance sheet asset side, prepaid advertisements, debtors, after reducing the provision, new provision of rupees 2000. Then cash at bank, then prepaid insurance, which was with 300. When we totaled up, the asset side total was matching the liability side total. That means our question is correct, our balance sheet is also telling over here. I'll be coming up with more points on your commissions in the next videos. Thank you. Accountitude, keep scoring. Like, share and subscribe to my channel.